payroll number looks all right. Wallet takes 50 off the table. Risk assets don't like it. That seems to tell me that risk assets now believe that 50 is required to stabilize the situation, i.e. we're maybe tiptoeing into hard landing territory. Am I reading that right?
I think that's a fair kind of straight line interpolation of the price action on Friday, but I'm not sure I'd want to read too much into that immediate short-term trading on a post non-farm payrolls Friday, right before the blackout period, before this kind of binary Fed. I think there are a lot of other factors at play here. I think it does look like the Fed is going to probably do 25 basis points. What is interesting is that we're not completely sure of that going into the blackout period. Normally we have quite a high degree of clarity. We should do after CPI this week, but it looks like 25 basis points. And there is a kind of negativity, at least by Friday's close, that, hey, this isn't good for stocks either way. If it's 50, well, the Fed is panicking, and then that means they're behind the curve and there's recession coming. If they only do 25, well, it's not enough easing coming for the market. So there's definitely a negative mood going into the weekend. That was the theme of last week. I expect that to temper a bit this week and people to realise, you know, the US economy is slowing, but it's not doing too bad at all.
Well, Mark, what would put more credibility behind a 50 basis point cut? What does the Fed need to see for that to get solidified?
Well, the first thing that could happen is we get a surprisingly, miss in CPIs on the low side there, saying that it's kind of inflation is rushing back towards target. It's important to remember that we've been above target for several years now in inflation. And yes, the disinflationary trend still seems to be in track. It still seems to be good, but we're not there yet. And there are some sticky components. So I also don't see us to have the kind of CPI volatility that would give a big miss this week. So I'm not expecting that to come into play. The only other aspect is that we are suddenly careening toward a financial crisis or some kind of recession. And again, I don't see that kind of come through in the next kind of week or so before the Fed, unless markets significantly correct much further from here. So basically, I just don't see the conditions for 50 basis points arriving in the next week.
Oil's up. Brent's trading 71.79 this morning, but it was down very hard last week. Mark, should that signal frighten us?
Yeah, I think so. But it is more about global growth and Chinese growth in particular. I think that it seems amazing, but pessimism around China is still intensifying. We've seen a lot of brokers give up on bullish calls recently. There's still disappointment in the market that China's economic story is not getting a little bit more of a positive spin. I think that's the main story around commodities here. You see it in metals as well. Iron ore is probably the most extreme case. So there's a global growth concern which is concentrated around China. It's abetted by those recession concerns around the US. I think they're a little bit overblown overall.